Welcome to The Explainer. Today we're jumping right into one of the biggest questions that holds people back from building wealth. How much money do you actually need to start investing? You might be thinking it's thousands of dollars, but let me tell you, the real answer has changed big time.
Yep, this is the big one, right? You've probably asked yourself this exact question. And, for the longest time, the answer made investing feel like some exclusive club with a really high cover charge. But that's just not the case anymore. For decades, the financial world really did have a high barrier to entry. If you wanted to get into a decent mutual fund, you were often looking at a minimum investment of thousands of dollars. That kept so many people on the sidelines, just thinking, well, I guess investing's not for me.
But today, wow, that number has completely collapsed. Thanks to some fierce competition between brokers and just incredible new technology, the actual practical amount you need to buy your very first slice of the market is just $1. Seriously.
So how in the world did we go from needing thousands to just a single buck? It's a huge shift. Let's dig in and break down exactly how that old myth got completely busted, opening the doors for pretty much everyone.
Okay, so the whole industry has really changed. The big players, Fidelity, Schwab, you name it, they now have $0 minimums just to open an account. But the real game changer, the thing that made all the difference, is the fractional share. This just means you don't need hundreds of dollars to buy one share of a big-name company anymore. You can buy a tiny piece, even just $1 worth, of any stock or fund you want.
All right, so you can start with $1. That's fantastic, it really is. But, and this is a big but, to invest smartly, you've got to understand that not all minimums mean the same thing. There are actually 3 different kinds you need to have on your radar.
First up, you've got the account opening minimum, which, like we said, is basically zero now. Great. Second, there's the transaction minimum, how much it takes to make a single trade. That can be as low as $1. But this third one, the sustainable minimum, this is the one that really matters. It's what determines if you're actually going to make money.
So what does that really mean? It's simple. Your investment is only sustainable if it can grow more than what it costs you in fees. If the fees are higher than your returns, you're literally guaranteed to lose money. This is what can make or break a small portfolio, and it leads us straight into the biggest trap for new investors.
Now let's talk about this trap, because in the investing world, the easiest looking path, the one that's marketed all over the place to beginners, well, that's often the most expensive and damaging one you can take.
You've seen them, right? These micro-investing apps look amazing. They're simple. You can start with just $5. But here's the catch. They usually charge a fixed monthly subscription fee. Could be $3, could be $9. Now compare that to a major brokerage where you start with $1 and pay 0 monthly fees and 0 commissions. That small monthly fee might not sound like much, but for a small account, it's absolutely devastating.
Let's just do the quick math here because it's pretty shocking. Let's say you have $100 invested and you're paying a $3 monthly fee. That's $36 a year, which is a 36% annual fee. The market could have a great year and go up 10%, and it wouldn't matter. That fee is like a giant anchor dragging your portfolio to the bottom. You are paying to lose money. And believe it or not, it gets worse. A lot of these platforms have a nasty little surprise called an exit minimum. When you figure out the fees are too high and you want to move your money somewhere else, bam! They can hit you with a transfer fee of $75 or even more. This makes it super expensive to leave, effectively trapping your money in a bad deal.
Okay, so let's say you're smart and you avoid that fee trap. What's next? Well, here's the fun part. As your capital starts to grow, your options get better and better. Let's take a look at what that journey looks like.
This table is a fantastic roadmap. When you're starting out from that first dollar up to maybe $500, a major broker with fractional shares is hands down your best bet. Once you get past that $500 mark, you could graduate to a robo-advisor for some automated management. Then when you hit $3,000, the doors to traditional low-cost mutual funds swing right open. You can even get into alternative stuff like real estate for as little as $10 these days.
So you see, even those old barriers have really clever, modern workarounds now. You don't have $3,000 for a classic mutual fund? No sweat. You can buy an ETF that does the exact same thing for just $1. And then there are these truly revolutionary products like Fidelity's Zero Funds. We're talking a $0 minimum and a 0% expense ratio. I mean, wow, that has completely changed the game for beginners.
So we've covered all the market minimums, from $1 all the way up to thousands. But we've saved the most critical one for last. And this one has absolutely nothing to do with the stock market.
And here we are at the final and honestly, the most crucial takeaway. The real minimum you need to worry about isn't for your broker, it's for you. Before you put a single dollar at risk, you need to build your own solid financial foundation first.
And what is that foundation? Well, it's pretty simple, and pretty much every financial expert on the planet agrees on this. Before you invest risk capital, you should have 3 to 6 months' worth of your essential living expenses saved up. And this money is not for investing. It sits in a safe, easy-to-access account.
Think of this as your emergency fund. It's your safety net. If your car breaks down, or you have an unexpected medical bill, or you lose your job, this is the money you use. It's what protects you from ever being forced to sell your investments at the worst possible time, like in the middle of a market crash, just to cover a bill. This fund is what actually makes long-term investing possible.
So we've come full circle. The market is ready for you. You can start with just $1. The question isn't how much money do I need anymore? The real question, the one you have to ask yourself is, am I ready? Thanks for watching.